Hi everyone, welcome. Welcome to webinar number 2 by SSP, Shanahan Swaffield Partners. On behalf of Wendy and myself and the partners here, lovely to have you on board for our government economic response to the coronavirus. Firstly, I'm just going to do some introductions. Obviously, Wendy and myself here, we're going to do very much the stuff on the stimulus package. Also, I've got Ben Wright in the room from South and Galdart solicitors, obviously looking very much at some of the legal angles, especially around hiring employees and staffing and those sort of issues for you. Also, Kerry Olive from our practice here is also going to do some stuff on some superannuation for you. There's been a couple of questions on superannuation, so hopefully help you out with that one. And as we said last week, we're hoping to give you a bit of an update week in, week out. And I'm also accompanied by Shane Nippers from Centrepoint Finance Brokers to give us a bit of an update from the finance angle. So firstly, I hope you all enjoyed the webinar last week. I think we've got over our tech issues. So now we're moving on to webinar number 2. Obviously, you might have heard some of the press. There's been some changes, but Wendy's just going to cover off on all the stuff that was probably in the stimulus number 1 and 2 to start with, and then we'll go through the rest of it. Over to you, Wendy.
Thanks, Mark. So for everyone who was here last week, this will be a bit of a recap, but at the moment we're getting so much information at once, it probably won't hurt any of us to go over it again. So as was announced in the first 2 stimulus packages, there was 2 forms of support for employers. The first one was boosting cash flow for employers, which provides tax-free payments to be made to eligible employers. And the second one was a wage subsidy for apprentices and trainees. So boosting cash flow for employers, what is it? It's a payment equal to 100% of the PAYG withheld from salary and wages up to a maximum of $50,000. The minimum payment will be $10,000. There's then a second boost equal to the total of all payments received in the first boost. So whatever you receive in the first boost is what you receive in the second boost. This means eligible employers will receive at least $20,000 with the maximum available of $100,000. So eligibility, small and medium businesses who employ people with an aggregated turnover of less than 50 million are eligible. You need to have held an ABN on the 12th of March 2020 and made eligible payments, which are salary and wages or director's fees. In addition, you must have also either lodged your 2019 income tax return or lodged a BAS for the 2020 tax year. So that's a BAS at any time from the 1st of July 2019 with sales showing at G1. The timing and delivery of these payments, the tax boost payments are tax-free and automatically calculated by the ATO. No new forms or registrations are required. There's nothing you need to do to register for this except lodge your BAS. The payments are delivered by the ATO as automatic credits in the activity statement from the 28th of April 2020. There's no good putting your BAS in on the 1st of April and looking for that payment in the mail. The ATO have said that they will not release anything until the 28th of April. Quarterly lodgers will be eligible to receive the first boost once they lodge their March 2020 and June 2020 activity statements and will receive up to a total of $50,000. And the second boost once they lodge their June and September 2020 activity statements, and it's another $50,000 in total. Monthly lodgers, the first boost will be available once you lodge your March 2020, April 2020, May 2020 and June 2020 activity statements. And again, you can receive up to a total of $50,000. The second boost becomes available once you lodge your June 2020, July August and September 2020 activity statements for a further amount of $50. The monthly lodgers have their first payment calculated at 300% of the amount reported in their March 2020 activity statement to even out these payments and make it fair for everybody. Just a reminder that the amounts that you report in your February and January activity statements have no influence whatsoever on these payments. So how's the payment received? You must lodge your activity statement on time. The cash flow boost is initially applied to reduce liabilities arising from the same activity statement. This means that you will pay less to the ATO. Where your credit exceeds the other tax liabilities, you will be provided with a refund, and the refund will usually be issued within 14 days. The refund you receive is non-taxable and you don't need to pay GST on it. So there's also a wage subsidy available for all apprentices and trainees until the 30th of September 2020. This subsidy is offered under the Australian Apprenticeships Incentive Program, and the wage subsidy will be 50% of the apprentices and trainees' wages for 9 months from the 1st of January 2020, so it's backdated to the 30th of September 2020. The maximum subsidy you can receive is $21,000 per employee. To be eligible for this one, you need to employ fewer than 20 full-time employees and retain an apprentice or trainee. The apprentice or trainee must have been in training at the 1st of March 2020. So you can register for this subsidy from early April. I still haven't seen any registration forms come out yet, but I'm sure they're available soon. And you can register right up until the 31st of December 2020. I'll now hand you over to Mark, who's going to run through the new JobKeeper subsidies for us.
Thanks, Wendy. Just before I start hey, look, everyone, please get your questions in. If you've got some questions, get them through on the question line. Is there a chat? Sorry.
There's a Q&A button.
A Q&A button.
So you can
if you can just type your questions in there and we'll do our best to try and assist you guys. Please be mindful, but hey, look, this legislation or this press release more than anything is only very, very new. We are a little bit short in some detail, but we'll try our best to answer as many as we can. As we said last week, if we find out more information on some of those questions, we'll email you all some of the answers as well. So, JobKeeper. Now, just remember, we've had Job Seeker and JobKeeper now. So don't get the two confused. So the JobKeeper subsidy. In this one, so it's for people, the subsidy is aimed to keep staff employed. So some of the key points there is that it's going to run for 6 months. Anyone employed from the 1st of March, and your first payment will be in the first week of May. One of the big areas that people ask me about is about the downturn of more than 30%. So you must remember that your business must experience a downturn of their turnover by more than 30%. So the subsidy is a $1,500 fortnightly payment. So I'm going to talk in terms of fortnights here, $750 a week or fortnightly payments of $1,500. And this is all administered by the ATO. Remembering that the ATO actually have information through Single Touch Payroll, STP, on staffing and employees these days. So employees will need to ensure that their employees receive at least $1,500 per fortnight before tax. So just with that one, actually I just had a quick look. So your $1,500 a fortnight, to give you an idea, before tax, so after tax, there's $192 in tax. Eligible employers. As I said, you must have a reduction in your turnover of 30%. So that's got to be comparable to the period, a 12-month period. So what I'm trying to probably get across here there is that, say for instance, you're looking at the month of March, you've got to look at the month of March last year to compare it. So if we're going to go and look at April, we'll look at April in that previous 12 months. So the April of 2019 year compared to the April of 2020. This one's also eligible for sole traders and self-employed. Now, to me, there's a little bit of question mark around self-employed sole traders. To me, they're probably one and one the same. So we've just got to get some clear definition on what they class as self-employed. But that's been a question everyone's been asking is, can sole traders, what eligibility have they got to any of this stimulus package? So they can come under this JobKeeper one as well. And they must earn less than $1 billion. I'm assuming that's probably most of the people that are listening in today. Eligible employees. So they have to be employed with you from the 1st of March. They can be current and those who have been stood down or rehired. They have to be full-time, part-time and long-term casuals. So casuals are in. So casual employees that are on a regular basis over 12 months. The question mark here is, what is a regular basis? So I have one client who has taken over a business about October, November. So they've only been in business 4 or 5 months now. They only got casual employees. Now, for them, they're probably in a bit of a sticky area because those employees have only been with that employer for the last 5 months, but yet they've actually been with the business probably about 4 or 5 years. So there's still some little holes in the legislation that need to be fixed to sort of help out, because I'm sure it wasn't there to disadvantage those guys. You have to be 16 years of age, Australian citizen, and you're not recipient of a JobKeeper payment from another employer. How is the ATO support calculated? So the ATO will make the $1,500 payment based on your payroll information, as I said, lodged through Single Touch Payroll. The payments are made monthly in arrears. So remember that, they're just made monthly in arrears. While the program is expected to run for 6 months, payments will stop if the employees are no longer employed. Registrations. So probably best to talk to your accountant in this one to help you, assist you through the registration process. But there's a link there for those who would like to intend to apply. So you just register with the tax office. I think there's been something like 250,000 registrations or thereabouts now. And remembering that this only come out, what, Monday night, I think it was. As I said before, the big question mark has always been around sole traders and self-employed. They're now included in this subsidy stimulus package. They can also register their interest through the JobKeeper payment with the ATO. So they go through the same registration process. These businesses will need to provide the following: ABN, nominate an individual that the payments are going to, and declare their continual eligibility for the payments. Now, the payments. So the top one, the payments will be made monthly to the individual's bank account. That's for the sole traders and the self-employed. If I pay my employee more than $1,500 a fortnight, has been the question, you will continue to pay their full salary. You'll receive $1,500 a fortnight from the JobKeeper payment. So, for example, you pay them $2,000 a fortnight, you'll continue to pay that. You'll just get your $1,500 amount through the JobKeeper payment. And then you'll also continue to pay the superannuation. That's also been another question that people are asking is, do they still have to pay the superannuation? So in this case, you'll pay it on their full salary. If the employee is less than $1,500 a fortnight, So you'll continue to pay their normal per fortnight salary, and then you'll pay the additional amount. So for example, I think the example that the Treasury uses in their one was $1,000. So Adam was getting paid $1,000 a fortnight. His employer will get the $1,500, and then the employer will then pay them the $1,000 plus then top it up to the $1,500. The superannuation guarantee will be just done on the normal fortnightly salary. So remember, in this one, it's just the normal salary. So for Adam, in this case, the $1,000, you would just pay it the normal superannuation on the $1,000. I think it is optional if you want to pay it on the extra $500, but you do have to still pay it on the $1,000. So that's it for the JobKeeper one. I'm just going to run through some of the other stimulus package that we did go through last week. I'm just going to quickly run through this one. So just remember, there's still the instant write-off. So that's increased from 30,000 now to 150,000. And it is only eligible at the moment until the 30th of June. So that's been the question everyone says, is how long is this going to go for? Remember that the $150,000 one is still due till the 30th of June. There's also the accelerated depreciation. Remember, there's also the household support payments. So those people who get some sort of Centrelink benefit, age pension, New Start, etc., they will get the two payments of $750. For Queensland Government, so they've got out low interest loans, still available, 250,000. We've registered a couple of people for this one already, with the initial 12 months being interest free. There's a small business hotline available. There's also rebates for energy. There's rent relief if you happen to rent premises from the state government. And for those who have payroll tax, I think most of them would probably know about it by now, but there's also some holiday periods for that one as well. So I'm just going to hand you over to Kerry. Kerry's going to inform us all about some superannuation measures.
Thanks, Mark. I don't have a lot of measures to talk about. The government's brought out 3 so far for superannuation. So firstly, we're just going to look at the support for those on reduced incomes. And this is the one we've probably had the most requests for information about. So who is eligible? Very similar to the job seeker requirement. So it's if you're unemployed, if you're eligible for the job seeker payment or any of those other government allowances like youth allowance, parenting payment, special benefits and farm household allowances. If on or after the 1st of January 2020 you've been made redundant or had your working hours reduced by 20% or more, and for sole traders, and I'm assuming, well, we assume that this also means for partners in a partnership, your business was suspended or there was a reduction in turnover of 20% or more, you will be able to gain early access to your super benefits under compassionate grounds. How much you'll be able to access is $10,000 before the 1st of July 2020 and another $10,000 between 1st of July 2020 and the 24th of September 2020. You can only have one application in each financial year. So, and the important thing to remember there is to get the application in before the 1st, if you're going to draw down before the 1st of July 2020, get the application in before that date. That then allows you to have a second application for the $10,000 after the 1st of July 2020. The other thing to remember is you can only make one application in each year. So if you for instance, drew $6,000 on the first application before July 2020, you can't then come back before then and say, can I get the other 4? You can only draw out one lot of money each year. So if you think you might need the 10,000, draw the 10,000 at that point. If you don't use it, you can always put it back into super if you don't want it. Same thing for the second application. If you think you may need the 10,000, draw the whole lot and put any back that you don't need. Tax treatment of that drawdown is tax-free. There will be no tax on it, and it won't be counted as income for any income tests for other Centrelink benefits. Okay, how to apply. Okay, if you're a member of a, well, either way, if you're a member of a non-self-managed super fund or a self-managed super fund, both applications have to go through MyGov, ATO via MyGov. The member has to self-certify to meet the eligibility criteria, and the ATO processes the application. In the case of non-self-managed funds, the ATO will give the determination to both the member and the fund will make payment to the individual. Where you might have a self-managed fund, the ATO will give the determination to the member then gives it to the fund, and the fund makes the payment to the member. Something to keep in mind here is if you have a defined benefit interest in a super fund, they are not obliged to allow this payment, so you would need to talk to your fund to see if they will give you the payment. Okay, applications are expected to be able to be made from the 20th of April 2020. However, at the moment, you can go on to MyGov and make an expression of interest, and the ATO will then advise you when the forms become ready. It's not clear at this point how long it'll take for the money to arrive in your hands. So you may apply for the first lot before the 1st of July. You may not receive it until after the 1st of July. So you could end up with the 2 payments in the one financial year. So to register your interest in early access to your super, you have to have been financially affected by the virus, and you have to intend to access your super early, and you also need to meet the eligibility criteria. There is a, we've lost that somewhere along the way, but you can access the expression of interest form, I believe, by going to the MyGov, through your MyGov account. And there's also a MyGov if you look for it or Google that early access to super, you will also get the link to the ATO site to express your interest. The next measure that the government has allowed is for people who may already be in pension phase with their super. They've halved the drawdown rates for the minimum payment of your pension. This will just help you to maintain your balance within your super, and that's available to both self-managed funds and retail and industry funds. So that's something you need to, if you wanted to discuss further, you can discuss with your fund. The other issue that was addressed was SMSF's leasing to business premises to related parties. So if any of you are our self-managed clients with property in your super funds, we did send some information out to you on Monday around this area, and probably the best thing is to just give us a call if you've got any questions on that issue. And that's it for me.
Wonderful. Thanks, Kerry. Just another reminder again, hey, look, if you've got any questions, please get on that question line, and we will try and help you out the best we can. As I said, hey, look, this stuff is coming through very quickly, so it's more us trying to get enough detail for you guys to help you out with it. I'm going to hand you now over to Ben Wright. As I said, Ben's from Southern Guard Solicitors, and he's going to have a chat to you and talk to you about the much more down the lines of the legal impacts as well, especially around employees and staffing. Thanks, Ben.
Thanks, Mark. Thank you, listeners, for tuning in. I hope that today I can give you some useful information. I'll just give you a little bit of background. Okay, the current industrial relations landscape has changed greatly recently. You've got the $130 billion job seeker subsidy. You have to remember that at the moment it's a proposal only. It's not yet legislated. Any advice that you're getting from advisors is from Treasury papers. It'll probably be a couple of weeks before the JobKeeper subsidy is legislated. So there's a risk to employers in implementing changes or agreeing to implement changes with employees before the new IR conditions are actually confirmed. You've also got to remember that in addition to the stimulus packages, it doesn't make any difference to the IR landscape in that all of the usual laws with respect to employment continue to apply. So you've still got the Fair Work Act, you've got the National Employment Standards, awards, employment contracts and enterprise agreements. I know that Mark's been over the job seeker subsidy, so I'll just give you a brief snapshot. The purpose obviously is to keep people in employment. Eligible employers are to receive $1,500 per fortnight flat rate payment for each eligible employee. The subsidy scheme will run for 6 months from 30 March 2020. Eligible employer is paid monthly in arrears with the first payment to be in early May 2020. Now, I hope to answer some of your practical questions that you may have following the recent introduction of the JobKeeper stimulus. I want to run through some scenarios that employers are going to face. And the first scenario is where you've got an employee or employees that earn more than $1,500 per fortnight. The question that employers have is, must I continue to pay the employer's usual fortnightly income, when revenue is tight? So there's a Treasury paper that came out on Monday, and it's ambiguous. It says that it gives an example whereby an employee has an income of $1,700 per fortnight, and it says that in that situation an employer can top up an employee's income. It doesn't mandate that an employer must top up the employee's income. However, when you take into consideration that all of the usual laws still apply, Fair Work Act, national employment standards, etc., that I referred to beforehand, and the employees' contracts still remain in place, basically an employer cannot arbitrarily reduce an employee's wage, okay? The employer is going to have to continue to pay the employee's usual wage, okay? That is unless the employer and employee can come to a prior agreement to vary the employee's arrangements, okay? So a unilateral decision, if an employer makes a unilateral decision to reduce an employee's hours or wages, the employer will risk contravening the employment laws or the employee's contract. So if agreement cannot be reached, the employer must top up the employee's wage to the usual amount. Failure to top up the employee's wages without agreement may result in a claim down the track for underpayment of wages. There's some other potential claims as well. It could amount to a failure to pay the employee their usual wage. They could argue that it's a constructive dismissal, and they could say they could bring a claim for an unfair dismissal. Or if you decided as an employer to top up some wages and not the wages of others, you may find yourself facing a discrimination claim from the employee whose wage you decided not to top up. Another scenario is where you've got employees who earn more than $1,500 per fortnight. The employer has been unable to reach agreement for alternative work arrangements, and the employer cannot afford to top up the wages of the employees. The option that an employer has in this situation is to consider standing down the employee, okay? The basis for standing down an employee is there may be provision in the employee's employment contract. That's not particularly common in my experience, or maybe in an enterprise agreement. If there is no provision in any employment contract or enterprise agreement that the employer has, then you've got to go to the Fair Work Act, and there's a section in the Fair Work Act, section 124(1)(c), which deals with standing down of employees. An employer, it's important to note, an employer cannot simply stand down an employee because of an economic downturn. To stand down an employee under the Fair Work Act, under the section that I referred to before, there's some specific requirements that have to be met, and that is that work must have stopped. Now, it's obvious that if a business is shut down, work will have stopped, but in some situations you might be able to, an employer may be able to say, yes, work is still going for my business, but work may have stopped for some of my employees. In that instance, the requirement that work must have stopped is met in relation to that employee. The work stoppage must be through no fault of the employer. COVID-19, nobody's going to blame any employer for that. And then the third requirement is that an employer must be unable to redeploy the employee in the business. So if those three requirements are met, an employer will be able to stand down an employee under the provisions of the Fair Work Act. The Treasury paper that was released on Monday then goes on to say that if an employer stands down an employee, the employee will only have to receive $1,500 per fortnight, okay? That's irrespective of the wage that the employee was on prior to the stand down. So, provided those requirements are met, an employer will be able to stand down the employee. What an employer will have to be careful of is that, they've got to seek advice regarding whether they can or can't stand down an employee, as failure to do so will result in an unlawful stand down, and an employer may face a claim down the track for unpaid wages, potentially an unfair dismissal claim, as a reduction in wages can amount to a constructive dismissal, or a discrimination claim if the employee unlawfully stands down some employees and not others. The third scenario that I wanted to address was where an employer has an employee or employees that earn more than $1,500 per fortnight. Agreement for alternative employment arrangements has not been reached, and the employer is unable to lawfully stand down the employee because there's no provision for stand down in the employment agreement, and the requirements of section 1241C of the Fair Work Act have not been met. An option that an employer has in this instance really is to start talking about terminating the employment of employees on the basis of redundancy. Now, an employer has to be careful when looking to make employees redundant. You can only terminate an employee's employment in circumstances of a genuine redundancy, and a genuine be a genuine redundancy, the employment must be terminated because the employer no longer requires the employee's job to be done by anyone, or alternatively that the employer is insolvent or bankrupt. And the third requirement is that the employer is unable to reasonably employ the employee elsewhere in the business. Again, if the employee's employment is terminated and it's not a genuine redundancy, there's potential for an unfair or unlawful dismissal claim. If an employer makes an employee redundant, in those circumstances, the employer will have to pay all of the unpaid employee entitlements, and that's annual leave, long service leave, etc., and a redundancy payment of between 4 and 16 weeks pay for employees who have been in service for 1 or more years. Okay, that is unless the employer is a small business employer, and a small business employer is generally defined as an employer with less than 15 employees. That is unless the relevant award provides otherwise. So in a nutshell, just to wrap things up, if an employer is looking to vary arrangements with employees, the employer is going to have to be careful and mindful of the IR laws, awards, employment contracts and enterprise agreements, and in making any arrangements, look to ensure that they're not contravening these laws and agreements. If an employer makes alternative arrangements for employees and is in contravention of the existing laws and agreements, then there's potential for employees to make claims ranging from unpaid wages through to unfair dismissal and discrimination claims. So employers should seek advice before making variations to employment arrangements. Thank you.
Thanks, Ben. So guys, now's the time to shoot in your questions. Just a reminder that we do have Shane Nippers from Centrepoint Finance, who has generously offered his time again to answer any questions in regards to any of the banking reforms that you may have seen in the last few weeks. Don't be afraid to shoot questions in about that as well. I'm sure he'd love to help you out.
Actually, have you got any comments about it, Shane?
Well, Mark, what's happening is it's still very much a state of flux. Even today, I've had 3 or 4 emails from different lenders saying they've updated the way they're approaching it and what they will do and what they won't do and what is involved to qualify or be assessed for those. So I'm in the same way. We're still waiting on a lot of these other questions to be answered. It's very much a moving target. So I just encourage everybody to contact their banker or their broker to see what is available. And certainly, even if you think you don't need the assistance that's available now, look forward a week, a month, 2 months, whatever. And if you think there's any chance at all that you might start to run out of cash or run out of working capital, I would encourage you to give serious thought to doing it now and get ahead of the curve, because that will preserve the cash to help you continue on for a longer period into the future.
So are you finding a lot of people are doing the deferral?
Yeah, certainly. We've probably had, we would have done more than 100 deferrals already since last Monday. So it's been taking up a big chunk of our time.
Yeah.
But yeah, certainly I think it's the smart thing to do.
And with the stimulus number 2, there was the 250,000 lending by federal, going to be secured by federal government. Are you finding there's a bit of movement in that area as well?
I've only had a couple of inquiries on that so far. And it's, again, each of the banks is taking a slightly different approach as to how they're doing it.
Yep.
But I think, yeah, it's still early days. Most people are looking at it. A lot of people are registering for the QRIDA loan that's available. And certainly that's been a lot of people more doing that than the actual bank one with the 50% guarantee at this point. But that may change as the situation unfolds.
Yeah, yeah, very good, very good. Actually, I've got a quick question for you, Kerry, as we're just looking up some of these questions.
Yep.
Are you getting any inquiries on the $10,000 release of superannuation funds?
We've had a couple, mainly around, when can I apply for it and what do I need to do? So I think the main thing for people to do at the moment, if they're thinking they'll go down that track, is to put in their expression of interest, and the tax office will then come back to you when the forms are available to make the application.
Yep, yep. Do you think it's an onerous task to actually go through the motions of getting that 10,000 out?
It's probably just a little bit long-winded. It's not money that you're going to get quickly. You probably need to look at other options, or use your other options first. Yep. And if you think that you're still going to need this option, then probably start looking at it now, because you're probably not going to get it from the way they're talking, because it has to go to the tax office, they have to assess it, then it has to go to the superannuation fund, and the superannuation fund then makes the payment. So there's a little bit of a time frame involved there. So, you could, if they get the application forms out in the next couple of weeks, you could be looking at June and maybe even July before you get the first payment. But I think it's important, if you're going down that track, certainly to get that expression of interest in now. Yeah.
Yep. I'm probably finding the same, I suppose. I'm finding most of my guys are deferring. I've That's probably the first step that they've taken, is contact the bank, because there's just a lot of unknown there about what is it going to be like in 3 months, 6 months time. So by deferring, just does give them that freedom to have cash flow available. I have had a couple of inquiries as far as the withdrawal, Kerry. Yeah, usually they're in a circumstance where they just need some of the funds to tie them. They can see that and they need it to tie them over.
Yeah.
But yeah.
And I think, if you keep in mind that you may not need all of it.
Yep.
So even if you take the whole 10,000, it's always possible then to put it back.
Yes,
it's not needed.
That's right. And probably most of the inquiries have generally been this week, definitely around the job keeper. So just stress again, hey, look, job keeper and job seeker. They couldn't have picked two words so similar, but so job keeper has been very much the inquiries. And as I said, there's something like 250,000 registrations, I think, already. So how are we going, Wendy, for the questions?
Okay, we'll just start running through the questions, and some of them will actually workshop between a couple of us, as we'll be able to answer them a bit better that way. And if you want any more questions, please keep on sending them in, because we will attempt to answer all of them this afternoon where we can. So the first question is, for boosting cash flow boost for employers, what if the March quarter BAS is the first BAS to be lodged for the financial year, e.g. they're a new business, so they haven't lodged a previous BAS this financial year?
No.
I think you've had a bit of experience with this week, Mark.
Yeah. Look, to me, I think that's some area that's been a real problem. I think government know that. To me, whether they're going to make some comparison to previous months rather than the 12-month prior, I don't know. But yeah, look, just stay. We'll get alerts and emails out as the information comes through. Yeah.
And I suspect if they weren't registered for GST and PAYG withholding prior to the 1st of January, then the ATO will actually realise that that's a new business, and I can't see any reason why they wouldn't receive those payments.
It wasn't designed to penalise people like that anyway.
No, not at all.
For sure.
So the next question we have is turnover downturn is compared with which periods? So it can be any period. So it can be March 2020 compared to March 2019. It can be January to March 2020 compared to January to March 2019. They haven't probably put a lot of detail around this at the moment, but those are the things that we are reading. The one thing that they do say is the minimum period you can use is a month. You can't pick a week.
Yep. So just stressing that, hey, look, it is a month. Getting a lot of questions around that. Hey, look, I've had a real downturn just in this last week. You've got to look at the minimum period, which is a month.
Next question, does the JobKeeper depend on the partner's income? Not at all. The JobKeeper payment doesn't depend on the partner's income at all. It depends on whether you're an eligible employee and an eligible employer. The job seeker payment, which is the extra $550 from New Start, again, they put those words way too close together. That actually does depend on the partner's income, but I believe that they have since lifted the partner's income to be annual earnings of just under $80,000.
Yeah, I heard it was something like that too, yeah.
Okay, next question. Is the JobKeeper payment only for private business? Are casual government employees who have lost work or hours eligible?
I haven't heard anything for government employees, to be honest. Yeah, I don't know if anyone else in the room has heard otherwise. But no, I haven't. I suppose we probably deal predominantly with business. So good question. If we find anything out on that one, by all means, we'll get something through to you guys as well.
Okay, next question. If as a business we can't afford to pay an employee their normal salary, which is over $1,500, can we commit to pay the $1,500 to keep them connected to the business, or must we commit to paying their full salary? Do you want to take this one, Ben?
Yeah, good question, Christy. First, point is that you are obliged to continue paying them their usual salary, okay? But practically what's going to happen is that employers are going to be, are having to be open with their staff, and they're having to say, look, we're not going to be able to continue to pay you your ordinary salary. This is the best approach to dealing with this. Can we reach an agreement, okay, for some alternative arrangements, okay? So it might be reduced hours. You might, reduced hours is a typical one, okay? So you keep them working in the business, but instead of 5 days a week, it might be 4 days a week to keep them, under that $1,500. You might, they can take some leave without pay, as well as working reduced hours. They might take some of their annual leave. So there's quite a bit of flexibility there. If you can't reach agreement with the employee, okay, they're just not going to play ball with you, then you've got to, consider whether you can stand that employee down. And as I said before, you're going to have to be able to show that work for that particular employee has dried up. In our business, for example, one discrete part of our business is conveyancing. Okay, now conveyancing is really shutting down at the moment. So we can identify that our conveyancers are, it's very easy to identify the work they're doing. If we don't see any conveyancers coming in, we can then go, okay, well, that employee has no work. It's not for any fault of our own. And, we can't reasonably be expected to redeploy that conveyancer elsewhere in the business because their skills aren't suitable. So in that situation, we can stand the employee down, and then we get our $1,500 payment, and we pass that on to the employee, and we're not obliged to pay any more than that, irrespective of what they earned before we stood them down. But if you're not in a position of being able to stand an employee down and you can't reach agreement, then you're going to have to start talking termination as a result of redundancy. And, in that situation, I would get advice before I made an employee redundant, just to ensure that you meet the necessary requirements of a genuine redundancy. And then you're going to have to incur some costs there of paying out the employee's entitlements and potentially a redundancy payment as well. But if you're a small business and you've got less than 15 employees, you may not have to make that redundancy payment. So first port of call really is sit the employee down, open communication, look to negotiate some alternative arrangements. And I would start by looking at the hours that they work, reducing them.
Very good.
Thanks, Ben. Next question. If we have a 30% downturn in revenue for only 1 month, does that mean we can claim the JobKeeper payment for employees for 6 months? That's a really good question.
Yeah.
The ATO have put some guidance out in regards to sole traders to say that they have to report their turnover each month, but I actually haven't seen anything in regards to businesses. So that might have to be a wait and see on some more information on that one, unfortunately.
Yeah. So sole traders. I see that they do have to report monthly, but we haven't heard anything else. So we'll get that out to you guys.
Okay, another question. Can we have one employee utilising the JobKeeper payment, but if we want another employee to use some accrued time first, is this an option? The way that the JobKeeper payment is actually calculated is it's calculated based on the number of employees that you report through single touch payroll. So if you have 10 people that you pay wages for on single touch payroll, that's the amount of JobKeeper payment you will receive, so 10 by $1,500. So as to how you meter that out, there is not enough detail around that yet to properly answer that question. But I have seen the government is saying that if you're receiving the JobKeeper payment for an employee, you must pass it on. And I don't know where leave comes in with that. Do you, Ben?
As far as the JobKeeper payment goes, yeah.
So if you've nominated, I'm thinking aloud here, okay? So if you've nominated the employee and they want to take leave, well, that's just, you're going to have to pass on that JobKeeper payment, the $1,500, and unless you've negotiated, some other arrangement where some of that leave is unpaid leave, you're going to have to continue paying that employee at full freight.
Okay, so another question. Ben, this one's for you. With the JobKeeper payment, I thought the money was paid if the employee wasn't working for an income. Are you saying that the employee is expected to continue working even though the business may have been told to close their doors, or do they get all this money for not working anyway?
So, yes, another good question, Darlene. So if the business is shut down, okay, this package is designed to two things, okay? So let's say your business keeps running. It's designed to keep employees in employment, okay? But if your business is shut down, then the package, the stimulus package, JobKeeper package, is designed to keep your employees, and they use the word connected with your business, okay? So in that situation, if your business is shut down or there's no work for the employee and you've had to stand them down, if you've nominated them for the JobKeeper, under the JobKeeper scheme, you are obliged to pass on that $1,500 to the employee, irrespective of whether they're working for you in the business because you're still going, or because they've been stood down. This is designed to keep employees in employment, and in situations where there is no work to be done, it's designed to keep them connected to your business so that when we get out of this situation, those employees just come back into the fold and things return to normal.
Just putting my business advisory hat on for a moment, I see a lot of problems for businesses who actually have had to close their door, cash flowing this for a little while, because the expectation is that you will actually pay the employees and then you get reimbursed a month in arrears. So Shane, are banks being kinder with overdraft facilities and things like that at the moment?
We actually haven't had a case like revolving around this come up yet, but I would think the trouble is a bit will depend on the size of your business.
Yeah.
Most small business with small borrowings don't have a business banker as such to talk to. They have to ring a sausage factory 1-800 number, and those people are a little bit limited in what they can approve. But I would think that it's fairly clear that the money's going to come from the government. You would hope that the banks would take an understanding to that, and they could say, look, okay, I've got 5 employees, well, I need to keep paying them, but I'll have that money in a month, you know? So you would hope they would give them a small unsecured overdraft or something to keep them going. Yeah, because that's what it's designed to do. So again, the lag is going to create a problem.
Yeah, I can really foresee a big problem coming with cash flow for some people. Some people will sail through, but other people, considering these people have already had 30% downturn in their business, cash flow might be a big issue.
Yeah, and particularly those that have been told to close.
Yeah.
You know, if they're in those industries. Yeah.
Another question, can we top up the JobKeeper payment with accrued leave? And this may have already been partially answered by you, Ben, I think earlier.
Yeah, so if an employee has accrued leave, that's leave on full pay. So, you know, if the employee is off for 2 weeks, they're entitled to receive their full wage for those 2 weeks. And if that full wage is more than $1,500, the employer will have to top up the employees. Will have to pay the top up. Okay. One option may be though is that you know, you reach agreement with the employee that, hey, you know, you can take. We can't afford to pay you full leave at the moment, but how about you take 2 weeks and, you know, half of that is paid leave, half of that is unpaid leave. You can, you know, come to agreements like that and, you know, that may help you afford some of this.
Thanks. Next question. If the government do shut us down, do we continue paying the $1,500? Do we pay super in this time? And will we calculate the shutdown time in our work cover calculations at the end of the year? And this is all as a hypothetical if we are shut down.
Good question.
Very good question.
Especially around the work cover anyway.
If we are shut down and you continue to receive the $1,500 JobKeeper payment, then you will continue to pass this amount on to your employees. I'll do the easy bit, you do the hard.
Do we need to pay superannuation on these times? Look, I'm assuming being shut down that you probably wouldn't need to be paying superannuation because that's just not their normal wage during that period anyway. Work cover, good question. I honestly can't answer that one. I have no idea.
And I don't
see our work cover could request it though when they have men at work.
So
Risk going.
whether it's going to be excluded from your gross wages for that period, good question. We might need to find that one out for you.
And because it's a federal government initiative, work covers a state government, they won't have talked to each other about this at all yet.
No.
So I'm sure that will come out at some stage. And next question. Hello, with the JobKeeper payment, do you think we can use our April 2020, fingers crossed, figures, as this is when we will see a big decrease to show the 30% decrease? Yes, from what I've been reading, you don't just have to be eligible in 1 month. If you are eligible in June, you can register then. If you're eligible in August, you can register then. At the moment, the government haven't put a shut-off period on it. I imagine they've announced it for 6 months from April to September. September. But yeah, if you get to April, May or June, and that's when you're experiencing your 30% decrease, then you can register. Okay, next question. How can not-for-profits take advantage when they can run no fundraising events and there are no employees, entirely voluntary run? The income is non-existent, however, the overheads continue.
Yeah, that's a tough one. Well, there's nothing as far as the only thing is sole traders, self-employed and non-profit.
Non-profit, that's for the JobKeeper.
Yeah.
Yeah.
Yep.
So they have access to the JobKeeper.
Would have maybe some access there is the only thing I'm thinking of.
And maybe some rental assistance from landlords who are being asked to be kind during this time as well. Unfortunately, we can't really give you any other big solutions that have come out for the not-for-profit sector at the moment. I'm sure there's lots of lobbying going on in the background about this at the moment.
Yeah. I think that's the only thing I could think of anyway.
Okay, next question. Are the JobKeeper payments effectively a substitute for unemployment benefits to the employee?
Oh, I suppose you could call it that, eh?
Yes.
I actually read something on that, and the Treasury paper is it actually does address that, and it makes it that these are not designed to be, it's not welfare it's not unemployment benefits. It's, the whole purpose of this is to, ensure that employees stay in a job or in connection with the business.
Can I just go back to the previous one about non-profit? So I'm just going to read JobKeeper subsidy. So eligible employers, obviously businesses with that reduction of 30%, but also included in this list are sole traders and the self-employed with an ABN and the non-for-profit who earn less than $1 billion. So I think there might be something in there for not-for-profit.
And last question that we have at the moment is, if a casual employee has been off work from mid-February due to surgery and is now ready to recommence work, will we receive the JobKeeper payment?
Tough one. So you've got to remember that to be an eligible employee, you've got to be full-time, part-time or long-term casual. So, which says casual employee on a regular basis for 12 months. Now that's about the information that I have on there. I don't know if anyone else has read anything as far as what it means to be a casual on a regular basis for 12 months.
I think, well, it's for at least 12 months. I think it's going to come down to the facts. How long has this casual employee been with you? Okay. Has the casual employee, so the casual employee has been with you for longer than a year, and is, has been getting, regular work. I think you'd have a good argument, if you were notified that, they're having surgery. I think you'd have a good argument for including them as a long-term casual employee, but it's going to come down to the facts. Okay, so if that employee hasn't been there for 12 months, they're not going to qualify. But if they've been there for longer than 12 months, the longer the better. They're getting regular hours, each week. I think you'd have a good argument there.
Very good.
Does anyone have any final questions at all? Quickly shoot them through to us as we wrap up and we'll get back to them.
Probably my only comment is, while they just go through those, is that I think one thing that I've learned in this last couple of weeks is, hey, look, any businesses out there, I would suggest to them to probably try and do a cash flow projection. Once again, hey, look, we do a lot of cash flow projections with our business advisory clients. It's really good to know, and it never establishes exactly what the future is going to be like, but at least it gives us some indication. I think for those who do it, and you can keep updating that on a continuous basis, it can show you exactly where you're going to end up and what your cash flow requirements are going to be over this unknown period. Is it going to be 3 months, 6 months, 9 months? We just don't know. But one thing I would suggest that you do is look at doing some cash flow projections on your business as well. And one thing that does do is establishes also a bit of a break-even point. Where's the point where, one, you're not making any profit at all? Are you better off to close the doors? All those sort of questions. So you get a real feel of your business is probably what I'm trying to get at there as well. I'm assuming, Shane, you probably see a lot of those sort of guys having to do cash flow projections when it comes to banking as well.
Yeah, and that's right. And for anyone who wants to apply for finance or is thinking apply for finance, if you've got a cash flow budget and it's not just pulled out of thin air, you've got some assumptions around all the numbers, how you came up with that income or what those expenses are and when and why, it'll certainly hold you in much better stead in trying to apply for finance as well as, so you can look at it and say, well, right, I'm going to have enough cash to get me through till June or July or whenever it might be. And then you can start putting a plan in place to be ready for that or what has to change to improve that.
Yep. Because we know, hey, look, a lot of this has probably been around the employees. And as Ben said, it's keeping that connection. Hey, look, for you business owners out there, hey, look, you got to survive as well. We know that, the cash boost is a minimum of 20,000. How far is 20,000 going to get you? So really consider looking at cash flow projections and and step it out and just see how long it will last, working on the turnovers that you're doing currently. Those turnovers decrease, recalculate your cash flow projections. Hey, look, if you want any assistance in that area, hey, look, that's what we're here for as well.
Very good. So a big thank you to Ben for coming along today from South Galdard, and also Shane for coming back from Centrepoint Finance, for giving their time to us. I hope everybody got something out of it. We will continue this webinar series again next week. Again, Mark and I will be back. There seems to be new announcements all the time with regards to stimulus packages. We'll be back to talk you through those. Justin Nothling, our financial planner from InvestRight, will be joining us as well as another expert. So we'll have plenty more to discuss next week. So look out for the invites, which will be coming out in your emails and also on our Facebook site.
I think we're going to have marketing, Wendy, next week.
Oh, and marketing as well.
We're going to have marketing next week. So, hey, look, some people have come up with some different innovative ideas about trying to keep their business afloat. And marketing is definitely one of those angles. So it would be really good to get a bit of an insight from a marketing perspective as well. Well, thank you. Number 2, we're going to keep these guys, we're going to keep these going until you guys no longer want to listen to us. And we realise there's information coming out all the time. So hopefully we can update you with the webinars. If there's some urgent stuff or some direct questions, we'll get them back to you as well. Once again, thanks for your time, eh?
Thank you.
Thanks, everybody.
Bye-bye.
Thank you.